Welcome, welcome, welcome everyone. I'm super excited to deliver this webinar here today on how to get started in multifamily investing properties. Okay, now I've been doing this for, it's been almost 20 years now, just getting into the space. And I started like many people out there, just like you started doing a small multifamily deal and started growing it from there, right? So the way I started back, like I said, almost 17 years ago at this point, started doing small multifamily and single family. Okay. So once I started doing that, I saw the power of real estate. It was kind of scary at first. It really was. I was scared to death. I was scared to death when I did my first deal, right? When I did my first duplex, I was even more scared than when I did my first single family home, believe it or not. But once I understood the power of getting a lease in place by a person who's obligated to pay it, and I see the money come in and I pay the mortgage and I have money left over, and I'm so happy about that, I realized how good real estate can be. And the longer you hold on to the asset, the greater the rents go up, it works out even better, right? So over the years, I've grown that one single family to over 1,000 units of multifamily that I've done already, right? So I've done all that stuff. We also do development. We do ground up and adaptive reuse of multifamily. So it's all multifamily. And then we have a third line of business where what we do is we do net lease. So think of like Dollar General, Dollar Tree. We might do animal hospitals, things like that, right? Businesses that are Amazon-proof, so to speak, right? And then we have a fourth line of business that helps people get into multifamily. So even after watching this, and hopefully, I think you're gonna get a lot of value out of this today. Even after this, you're still looking for help on how to get started, how to build that wealth in multifamily, or even single family for that matter, right? Check it out, themultifamilyadvantage.com. We show people just like you how to crush it in real estate. I'm delivering all this information, right? It's not, I pawn it off on someone else or whatever. I'm doing it, right? 50-week mastermind with total online component where you're going to learn everything you need to know to build success in this line of work, okay? In this career. It's running a business, guys. It's exactly what this is. So you really have to understand how to put it together, okay? So this whole real estate thing has changed my life. It's allowed me to get out of corporate, something that I was never really cut out for, right? I was never really cut out for doing corporate. And I had success doing it, until one day I just couldn't do it anymore. And now real estate is what I do today. That's why I'm very passionate about not only what I do, but helping others get started in this powerful wealth building way of getting your future on track, right? So there's just something really special about owning income producing assets that pays you every single month. It gives you options. It gives you flexibility in life. You just can't get that anywhere else, right? Maybe you're in corporate and you're happy when you can get like a couple weeks off. Well, if there's other ways to live your life, and I'm not knocking anybody. If anybody's happy doing what they're doing, fine. Hey, that's great. I just want people to be happy doing what they're doing, But there's something about living life on your own terms, and it really is that special, right? So if you really want to do it, I'm sure you get value out of this webinar too. I'm going to go through all the nitty gritty. But you can also check out themultifamilyadvantage.com, where again, we go through a whole lot of we have a mastermind that we talk about how to build success in this space. All right. So in this webinar, I'm going to walk you through everything you need to know about getting started in multifamily. Okay. We're going to cover some of the benefits as to why it's a great way to build income, how to find a good deal, how do you get financing for these types of deals, especially in today's crazy, crazy market, how to perform due diligence and deal analysis, building your real estate team, making offers and negotiating a purchase price, and managing the property after you close. Extremely critical, okay? Now, I'm also going to share some of the pitfalls that you have to avoid as a new investor. So believe me, I've done a lot of stuff, okay? And especially when I was first starting out, and you'll get to learn some of the things that I did, and so you don't have to repeat them, right? Which is part of, especially when you're in a mastermind, right? That's really what you're trying to learn is how do you avoid making some of the big mistakes, right? But ultimately, my goal here for you today is for you to leave this webinar with some clarity on a step-by-step process on how to get into your first small multifamily asset. Investing in real estate is very, very simple, but it's not easy. It takes dedication, it takes persistence, but the payoff is very, very rewarding if you do it right. So let's go ahead and get started, all right? First of all, let's talk about the benefits of multifamily. Now, the benefits are great. It's a great way to build wealth. You get that cash flow first off, right? The rental income collected each month provides consistent cash flow that you can use to reinvest or maybe even live off of it, right? So this gives you options, which is always what we're looking for. Money is not just about having a lot of it. It also presents you with options. And what do I mean by options? Maybe you want to check out your kid's recital, but you can't because you have to work. Well, if work is not a thing, you can still have the flexibility of your own time. Or you want to take an extra week in Colombia or something. You could do that, right? Or somewhere on a vacation or whatever the case may be. Real estate gives you options. That's what we're talking about, all right? Secondly, it gives you appreciation. Historically, multifamily values, they tend to appreciate steadily over time, okay? That equity is something that you can build and you can tap into it if you ever need to. And again, there's cash flow markets, there's appreciation markets, and knowing those types of markets too. But in any case, even in today's crazy market where inflation's out of control, there's still demand for multifamily. You also get leverage. You can finance 75 to 80% of the purchase price with a mortgage. So this allows your money to go further. Now imagine if you're, say you're buying a $100,000 property, right? Just for fun here. You could put down $25,000. The banks would give you $75,000 to that deal. Nothing else out there no other bank will do that kind of stuff. Certainly, Chase Bank won't give you $75,000 for your 25 to go buy their own stock. They won't do that. But they will give you money to buy a hard asset, right? So what does that tell you, right? What does it tell you, right? Even the lenders believe in real estate. Even the lenders believe in real estate. What else do you get? The tax benefits, okay? You get these huge depreciating deductions to lower your taxable income because you've invested in all these rentals, okay? What else? Economies of scale, larger unit counts, okay? Are more efficient to run than single families, right? I can tell you that from firsthand experience. You certainly, if you have 100 single family homes, you have to run from asset to asset to maintain it or whatever, and you have 100 different roofs as opposed to one roof on a 100-unit apartment building, right? Different type of scenario. What else do you get? It's a hedge against inflation. Rental income properties and property values in general, they tend to rise with inflation over the long run, okay? And even today, we're still seeing cap rate compression on all these assets that even we own. It's like there's still this, people are still looking for assets to buy, and rents are going up. They're still going up. So it's a great way to hedge against inflation. Okay. What else is there? You get to focus on the business of running an asset. So multifamily is like running a business. It's not just owning property. So this investor mindset leads to making smarter decisions, and this is a big part of what it means to buy and hold these types of properties, okay? The key, of course, as with anything else, is buying the asset properly, making sure you buy solid performing assets in good locations at reasonable prices, all right? To do that, and you're gonna have a great time and great wealth with your multifamily deals, right? Because it could pave the way for financial freedom. So the next question becomes then, How do you find those good deals? That's a good question. Let's dive into that. All right. So the first step here is to find great deals to buy. Here's some proven strategies that I've used personally. Okay. And you can use them too. Okay. So finding a top broker who specializes in multifamily and in the targets that you're looking for. Okay. What does this mean? Interviewing many brokers. Find one who's investor friendly. Okay. Find one who wants to do business with you and build a rapport with them. Now, if you want to know more about how to do that, download the book. There's a free ebook that we have, guidetobrokers.com. Go ahead and check it out. I go into a great amount of detail on everything on how to build credibility, how to get a return phone call. I even have scripts in there that you can use right now to start reaching out to some of these folks and get in front of them. So as new deals arise, you'll be at the top of the list so they can call you first, okay? What else can you do? You can also look for deals on LoopNet, not to buy, just to underwrite. So you can underwrite those deals and look for ways to improve those assets. All right, maybe they're below market. Look for the vacancies. Look at the data. Look at some of the interiors that are normal in that market, and see what could be done. Try to imagine what can be done to that asset to improve the asset and possibly drive rents further. Is there any movement? Can you actually move the rents up? These are the types of things you want to study and learn and understand in an asset in any given market. Okay. Another way you could do this is to drive the neighborhoods that you're looking for. And look for the for rent signs. Look for properties that have like high grass. That means that the grass hasn't been cut. That means they're probably not going to have any money just to even cut the lawn, for that matter, right? You're looking for opportunities that could show a frustrated landlord, and then by there you can contact the landlords directly about seeing if they're willing to sell to you, right? But what you want to do is you want to try to find deals where the seller may be upset, maybe they don't want the property anymore, maybe they'll cut you a deal, they'll take it over, they'll sell to you, right? So what else can you do? Look for those meetups, okay, and network with those folks that are in that market, okay. A lot of deals sometimes they're transferred just by word of mouth. They'll hear maybe you'll go to one of these meetups, and someone will be talking about, I heard from Joe, and Joe's like all upset about his partner. His partner's like got all kinds of problems, and Joe wants to just get away from his partner or whatever. This could be an opportunity for you to see if you meet up with Joe, and maybe you can work out a deal with Joe and his partner and see. But you know what? I'll take this off your hands, guys. You guys can go about your business, right? And maybe you can get in there before it even hits the open market. What else can you do? You can follow local auctions, foreclosures, perhaps probate sales for distressed multifamily opportunities as well. Okay, you can look for that. You can also search the county tax records for potentially absentee owners. So some of them may be quick to unload the property, especially if they're not local and they just want to get out of the asset because they need a liquidity event, right? You can also try direct mailing campaigns to target specific geographic areas. You can find lists, or you can buy lists rather, from listsource.com. Go ahead and check that out, and if you're interested. I'm not sure the success rate of such lists, right? I've personally never done it before, but other people have, and they say that they've had some results. But I want to share that with you here as well. But every and any way to try to get a deal is on the table here, right? So you never know, and depending on the size of the asset, if you're looking for, especially for smaller assets, for smaller multifamily, a direct mail campaign may be a great way to get your hands on a deal, okay? Oftentimes, the best deals are not going to be on the MLS. They're not going to be on LoopNet. They're not going to be on Crexy. They're not going to be in those places. So sometimes you have to hunt for them, or you have to build rapport with a broker. So this part takes a lot of work. but the payoff of finding an off-market gem is absolutely huge. Okay, so now let's talk about the financing options. Okay, so let's say you have a deal and it looks great. Okay, now you need to look at the financing options here. So there are many choices here for new investors. Now, if you're doing a smaller multifamily deal, like say up to 4 units, you can do an FHA loan. Typically, if you could do 3.5% down, but you're gonna be required to live there. It's a great way to house hack, either duplex, triplex, or fourplex, right? Maybe you just get a conventional loan too, to 20-25%. Now, with commercial loans, okay, commercial loans are a little different. Commercial loans are going to be much larger. You're going to want to either go with a broker or directly with a lender. Now, these days, I would typically, not typically, I've always gone to a broker for commercial loans, and I've paid a little more money for it. So you might think, why would anybody want to do that? Here's the thing, okay? The broker will find the right lender for your deal. Not all lenders like, say, C-class assets. They just don't. Not all lenders like A-class assets. Not all lenders like industrial or whatever it is. They're not obligated to like your deal. And some lenders, they like lending money to certain types of asset, and it's the broker that knows who these lenders are. Certainly you can go do the legwork and figure it out yourself. You can do that. Nothing wrong with it. However, I just pay the money to the broker to get me the right deal and shepherd the deal through to make sure it gets done properly in a way that that makes sense for everybody. And there's a great deal of work to do that too. There really is. So I would rather pay the money to a competent, great broker that gets the deal done, as opposed to trying to run the whole thing myself and try to do all the underwriting and try to walk the property and do all the lease audits and do everything else associated with the deal. I'd rather not do that, right? I'd rather just try to farm out some of the work. And listen, if your deal gets killed by 1 or 2% of what you're going to pay the broker, it's probably not a good deal. You need to kill it anyway. Seriously, right? I mean, the deal should not, I'm not looking to waste money either, but at the same time too, they're bringing real value to the deal. Leverage the value, leverage it, take it on, right? It makes total sense to do that. What else can you do? You can syndicate the deals to help you build the equity, right? And by syndication, that means pooling money from investors, and then what they're doing is they're investing in the deal, right? And they get ownership in the deal. They get to split the profits, and it reduces overall risk as well, right? So another way you can do this too, when it comes back to financing, is seller financing as well. You can do like an owner financing or a land contract. Both are very, they're similar in how the money flows, but they're different in terms of who owns the deed. If you want to know more about that, I've covered on previous webinars here previously on our weekly call. But you can also go to the YouTube channel, the Bulletproof Cash Flow YouTube channel, and I've done, I think it was like maybe 4 or 5 weeks ago, specifically on creative financing options. Okay, so go ahead and check that out. It's great material. We also have 700 plus videos there right now where we have stuff like this. And we've also interviewed some of the best people in the real estate space, right? So go ahead and check that out, okay? What else can you do? You can also use equity and some of the existing assets to fund new assets, okay? Be very careful about doing that. You have to make sure you have a real good deal on your hands before you start leveraging one property for another one, okay? Because the last thing you want to do is build a house of cards where you have one asset, you have a bunch of assets depending on the previous one, and if one asset fails, they all fail. You don't want to get caught up doing that. So you want to try to have the right amount of leverage to not expose too much risk, okay? So in any case, you have to run the numbers to see how much cash would be needed to close the deal, okay? So some lenders, they'll basically they'll pre-approve you for a loan, or in the case of a broker, they will start doing the upfront legwork to tell you what the deal might actually look like, what it might pencil for, because that's all they do all day is shop deals with their lender network. So they'll be able to tell you once you sell them, once you send them a rent roll and a T12. A rent roll is all the rents for all the folks living there. A T12 is the trailing 12, the last 12 months of financials. You send all that to a mortgage broker or a lender broker, and they will tell you what sort of options you might have in terms of rates and leverage, right? So you can build that into your underwriting, okay? Then what's next? Due diligence analysis. Now, if your offer is accepted, the due diligence phase starts, and here are some key things to cover, okay? First of all, you really need to do your physical inspections, okay? What does that mean? Inspecting all the units, all the common areas, the roof, the foundation, the sewer, the HVAC, electrical. You have to do all that. Then you have the market due diligence, the market analysis. You have to confirm that the rents are there and there's plenty of demand for them. So you get the comps for any nearby assets to know where the asset that you're looking to buy, where does that fit in to the rest of the market in that immediate area. And then you're doing a financial due diligence. So what does that mean? Reviewing historic income and expenses. You want to look at the rent roll. You want to look at leases. You want to look at utility bills. You want to look at the expense ratio on some C-class assets. A normal expense ratio, 55 is, in my opinion, aggressive these days, depending on where the asset's located, of course. 62% is probably a little more realistic. I've seen financials on various places where it's a 30% expense ratio. It's not even realistic. Like, it's not for a C-class asset. It just isn't, right? So just be aware that when you're looking at these assets and you're looking at the expenses, that it makes sense, okay? What else is there? You're doing a tenant due diligence, right? So that means making sure all the background checks are there. So typically, whenever you're pulling all the information for the tenants, you're looking at sometimes we'll send you any type of background checks, police reports, sex offender, crime, whatever. Hopefully they've done all that, or at a minimum, they have it in their processes and procedures. Because the last thing you want to do is take on a bunch of bad tenants, and then by the time you take over the asset, you may have a mass exodus on your hands too. You want to try to avoid heads on beds, people just stuffing the property with a bunch of people just before they sold it, just to bring the occupancy up. And then you get the refi done and they all bounce, right? You want to avoid that. You want to avoid that. That has happened, by the way. So just be aware of that, okay? Regardless, you want to review the occupancy rate. You want to review turnover. You want to make sure that the tenant trend line is solid, okay? What else are you looking at? You're looking at the percentage rents as well. So make sure that the rents are in the market are supported by the area itself, okay? You're also going to want to run detailed financial analysis on the property. So what does that mean? Creating a pro forma and a P&L statement, projecting your new income and your new expenses. Now, if you're brand new to this, okay, that's fine. Again, go to themultifamilyadvantage.com. If you did find a deal like this, you'd be able to bring it to our 50-week mastermind that we've run, and you could bring it there and we'll tear the whole thing apart. And we can help you do all this kind of stuff, by the way. So if you're new to it. If you're experienced, some folks may want to maybe you already have an asset nearby and you can get better rates on, say, landscaping or laundry or some of the other key things when it comes to operating the asset, right? And you can reduce the overall operating side of things on the expense side, right? What else are you looking at? You're looking at calculating the key metrics like cash on cash return. You want to know what the cap rate is going to be. You want to know the DCR, the debt service coverage ratio, which is very important these days because that's what lenders are lending on now. They're looking at the DCR. And a 1.25 is usually going to be the minimum. So, and obviously you don't want to be at the minimum when you're buying the asset. Okay, you don't want to be there. You want to be much higher than the 1.25. Like 1.25 as an owner is where you start in a way that you want to start there and you want to actually improve the asset to make it better, okay? But that's a whole other scenario. But the point is that 1.25 is going to be the absolute minimum for most banks, most lenders, okay? But what you're also going to want to do is stress test your assumptions with different scenarios to assess the overall risk. So what does that look like? If, let's say, for instance, you acquire the asset, you're at 91%, and then next thing you know, over the next 3 months, something happens there. I don't know, we blow out a water tank or something like that. The tenants are already on edge to begin with, and they all decide, like, you end up losing a bunch of tenants, and now you drop down to 80%. Can the asset still stay afloat, or do you have to throw money at it? These are things you want to know ahead of time. What is the lowest amount that the asset could run without you having to kick up any cash into the deal? You want to know up front. You want to know before you get into the deal what you can do. So to assess your risk and your exposure, you want to know this going up front, okay? You want to know what's going on before you take down the deal, okay? You also want to determine any repairs that might be needed and budget a realistic rehab if you need it, all right? Don't ever, 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 never, ever say you're going to do this rehab using the NOI from the deal itself. That never works. It just doesn't work. Don't do it. Don't do it. Don't do it. Kiss of death. Don't do it. Raise all the money. Get your hands on all the cash needed to do the work. As soon as you take it over, execute. Get it done as fast as possible. Because what you're doing is you're improving the property. When you improve the property, you can increase the rents anyway, right? By doing it piecemeal, by doing it using the revenue from the asset itself, it's going to cost you way more time and money, and it's extremely difficult to get caught back up. I've seen it happen. It never works. It has 100% failure rate. It doesn't work. Don't do it, okay? So as you're going through all this, if you spot issues, you spot problems, maybe you can negotiate a lower purchase price, okay? It's worth taking the extra time to get this part right. It really is. Now, again, if the seller is not motivated, if the seller is very, very much hard pressed on, well, they better not retrade me or whatever, if you could try doing a retrade, and if you try doing a retrade, chances are you'll probably get rejected and then maybe even kill the deal. So just be aware of understanding what is important to the seller of the asset too, by the way. All right. So now what's next? Assembling your team. To maximize your success, you must have an experienced real estate team. What does that look like? Okay. First and foremost, property manager. Find a property manager first. This is the first person you're looking for. Okay. I talk about this in the Guide to Brokers too, by the way. A good property manager who has a very good reputation in the market itself will open many doors for you when he talks to the brokers. And you might say, what do you mean by that? Well, if you're talking to the brokers and you say, yes, my name's Agostino and I'm with Bulletproof Cash Flow. We buy multifamily assets. We're currently working with Chuck over at ABC Property Management. The broker might say, oh, I know Chuck at ABC Management. He's a good guy. I like Chuck. If Chuck's a good guy and he's a known person in the market and you're working with Chuck, it opens that door for you, right? You don't look like a newbie. You get to leverage other people in that market. Okay, so property management first, and then from there, secondly, of course, the brokers, who I just mentioned a second ago, right? They're the ones that find the deals. They write the offers. They negotiate the deals between the seller and the buyer, okay? Third, the lender. You need a lender. Work on trying to find a good lender, a competent person. So many lender brokers out there, a lot of them are terrible. They don't do the job right. They ghost you, they miss calls, whatever the case may be, okay? Find a decent lender broker, someone you can build a long-term relationship with. And again, like I said before, okay, some lender brokers are really good at doing certain things. I have one lender broker, he's awesome at doing multifamily. He doesn't really do net lease that well, but it's okay. I have other folks that do that. But the point is that you have, just like you do with the brokers, okay? Different brokers do different types of multifamily assets. Some do luxury, some do smaller, like say up to 30 units. Different brokers do different things, right? And your task as a person who puts deals together is to understand the type of asset you're looking to buy and make sure that your team matches up to the types of deals that you're looking to get to, okay? So getting a lender is important too. Of course, you're also going to need to build your vendor list, specifically contractors. Finding contractors these days is very, very tough. We all know that. But especially contractors, they're the ones going to execute your plan when it comes to renovation and doing any type of major repairs. You want to know up front, before you even get this deal under contract, who's going to do the repairs, where their quotes are coming in at. You want to know where the costs are coming in. Sure, you can estimate it a little bit, but you don't do this for a living, all right? Or maybe you do, but you want to understand what is it going to take to get it done. And it's always good to have a second or even a third opinion, right? Who else do you need? A real estate attorney, someone who reviews your contracts, handles the closing, but someone who's a pro at doing real estate, right? That's the thing. I would also recommend you don't need to go to the biggest, baddest, top law firm in the whole town, right? You don't have to do that. You can find decent folks, especially if it's your first deal. Maybe it's a solo practitioner. They can do a great job with handling a very simple closing, okay? And preferably, you can find those people at the RIAs, the Real Estate Investor Association. A lot of times, the attorneys will show up there, and usually they're solo practitioners who are looking to build their business. They'll usually do a good job, right? Interview them, talk to them, get to know them, right? And they might do a good job by you, okay? Who else? A CPA, okay? They're the ones that files the taxes. They advise you on accounting and entity structures. They also handle your bookkeeping too. If you're really, really bad at doing bookkeeping or you just don't want to do it or whatever, right? It's going to cost you a little extra, right? But you know what? The headache is well worth it. You know, it's going to take money away from the deal itself. But listen, the intent here is to build a business. You're not just going to buy, hopefully you're not just going to buy just one deal. You're going to buy a bunch of these things, right? So the bookkeeping side of things is extremely important, especially when it comes to tax time. And if you want to improve the overall, how should I say, improve the bang for your real estate buck, having a CPA that can handle the bookkeeping too is huge. Okay, so consider that, all right? What else? Insurance agents. They get the proper insurance and proper coverage for the asset itself. So my guy I've been working with for over 5 years, he's helped me out tremendously on getting the right insurance for the right deal with the right coverage, right? And you know, it's one of those things I don't skimp on, because especially the bigger you get, the more assets you buy, you become greater risk at more mishaps taking place. Not because of any other reason that, you know, there's just the numbers don't line up in your favor. You have a lot more people in your assets, and only just take one thing to happen, and now you have a big claim on your hands, right? This is one place you don't want to skimp. You want to make the investment of good insurance, right? And it's extremely important, because if you do it wrong, it can cost you a lot of money, right? In the end, you want to choose specialists that have a focus on multifamily, okay? It's not just part of the business, it is their business, right? So you can do that by asking investors for referrals. Maybe you vet out the team members and do your due diligence on those people as well. Do you get along with them? Do they return your phone calls? Do they screw up? If they start screwing up and they don't return your phone calls and they don't get back to you, whatever the case may be, find someone else. Yeah, that's right. You heard me. Find someone else, you know? These people are going to be extensions and representatives of you and your company, your business. And if they're lacking in their own way, you don't want to have someone like that on your team. You really don't. Okay? Good. Now what happens? So you have your team. Now what's next? Getting offers out there. Once you've analyzed the deal, and a deal looks good, now it's time to make an offer. So you can have your broker draft a nice offer letter with the key terms, the price, the closing dates, the deposit amounts, everything. I personally like to make my LOIs, my letter of intents, look almost like a purchase agreement. Not in terms of size and length or anything else like that, but in terms of how it reads, because I want it to look as official as possible, as real as possible, right? Because I want that buyer, or rather the seller, to know that me as a buyer, I am serious about doing the deal and I want the deal. And I want to come across as a serious buyer, right? Then you submit all your supporting documents if you need to, right? This might be a pre-approval letter, proof of funds, maybe your background information. We have a little bio that we often attach to our stuff, or we even do I refer them to our website as well. We have several websites, and part of it is if they can see your LOI and they see that who you are based on your website, it builds further credibility, right? Then what else is there? You have to be ready to negotiate, right? Offer a low but reasonable number with room to increase if you need to, right? Generally, the rule of thumb is like 80% of asking. It depends on the market, depends on the competition, depends where you're at. There's a lot of dependencies here. This is where you have to feel out the seller and the broker to figure out where you might be. You don't want to start lowballing people, because if you start lowballing people, you get a reputation of being a lowballer, and then nobody's going to want to do business with you, okay? All the brokers, yeah, they all work for different companies, but they all talk. All of them. All of them talk. So just be aware of that, all right? So keep your contingencies also flexible, but you want to make sure that you have a reasonable inspection period, you have reasonable mortgage approval, you have reasonable appraisal time. All those types of things are fairly reasonable and within a time frame that makes sense. You don't want to create an LOI and tell the seller that you need 6 months to close this thing. They're not going to go for that. They're not going to go for that. So what else is there? Sticking to your criteria. Don't get sidetracked by emotions or your competition. Just stick with the plan. Find out what's important to the seller. Make sure LOI reflects what is important to the seller to make them comfortable about doing a deal with you, okay? Also, be responsive to what the seller's broker says, and especially when they're countering or addressing any type of concerns in your LOI. And whenever you need to, leverage your team. That's why you built a team, right? Maybe you have a broker representative on your side. Maybe you do, right? But having a broker on your side and the lender broker, they can vouch for your credibility as a buyer because they've done their due diligence on you. How much more powerful is it if if two other people are calling up the seller's broker and saying how cool you are and that you're credible to getting the deal done? If you can arrange that, the likelihood of you closing the deal, the likelihood of you getting the deal yourself increases dramatically. Okay, that's really what it comes down to. All right, so persistence and discipline are absolutely key when you're doing this type of thing, right? You have to use the right strategy, and then when you do, you'll get an offer accepted. All right, so here's some tips on closing. So once your offer is officially accepted, okay, you're almost there. Now you have to make sure you pick a title company to get the job done. I like to use national title companies. I want to use big title companies, okay? And I typically use one title company that consistently, I'm not going to plug them right now, but I use the one title company that does all my work for many reasons, of course. But the thing is, though, is that they're really big in the sense that if I get discounts, get volume discount, number one, and number two, there's also in some of these smaller companies, there have been theft that's taken place at some of those smaller companies. I'm not saying it's going to happen with anybody you're dealing with. I'm not saying that, right? It doesn't happen every day, right? But it has happened, and I don't want to introduce any additional risk to the deal if I can avoid it. And here's what I mean. If it's a small company, like, some smaller business, and they have, say, $2 million of escrow, who's to say they can't just get their hands on all that money and leave for Mexico? They could do it. Has happened numerous times. I know of at least 2 cases, in my little market over here in the Midwest. So if it's something that I can avoid, why take on the risk? There's no upside, especially when it comes to title, right? The only upside there is in my case is that I get to save some money. Great. So what else do? I do a final walkthrough. So what I mean by that, and this is, again, at the closing time here, when you're about to close, I do one last inspection right before closing to check the condition of the asset. This might be, like, say, maybe 2 weeks or 1 week out to closing, okay? At this point then, after we close, after we shut the deal down, the title company is going to record the deed. They they provide proof of legal transfer, and everything's filed with the county. Make sure all utilities are changed. And again, if you have a competent property management company, they're going to take care of all this stuff for you, which I strongly recommend, by the way, because there's so many moving parts when it comes to changing your electric, your gas, your water, changing all that stuff over and making sure it's all coordinated, along with notifying all the tenants where all their money is going to be going the following month. It's like, if you hire a property management company to handle all this for you, it'll be a lot smoother. What else do? You might need to change locks and things like that to ensure that the place is secure. Again, that depends on who you're buying the asset from, and what type of asset it is. And then, like I said, the property management company is very important. And by the way, the insurance too, right? Making sure that the insurance is active and switched over the day that you take ownership. So staying engaged throughout this whole process and making sure that your property management team is asking the right questions and doing the transfer properly is extremely important. All right. So, anyway, that's all I got for you today. This is just, as I said, a very high level beginner's guide to multifamily. Okay. Certainly you can see there's a lot that goes into this, right? There's a lot that goes into it here. But like I said before, if you want to know first off about how to get in front of a broker, guidetobrokers.com, go ahead and check that out. Free ebook. If you're looking to raise money for these deals, guidetocapital.com. Okay, it's another free ebook. Go ahead and download that. And if you're really serious about getting into this game and you want to understand some of the key specifics about how to do everything I just described, okay, www.themultifamilyadvantage.com. Go ahead, check it out. It's a 50-week mastermind. We show you how to underwrite deals. We show you how to pick the right market. We show you how to build rapport with the brokers, how to build a personal brand so you get those callbacks. The brokers really are the key to getting the deals. Okay, they really are. And that's going to be your first line of defense. Certainly you can go drive for dollars. You can try to do the direct mails. All that stuff works. But you know what? Most of the deals that I got was from the brokers. Okay. So listen, I'm excited for you to get started in building your wealth journey. Okay. Real estate, I found, is the way to do it. I've tried corporate and it wasn't for me. I just didn't like it. All right. And if you're sitting here watching still and you made it this far, chances are it's not for you either. All right. So check out the multifamilyadvantage.com. All right, I think that when you do, and maybe talk to one of our folks, I think you're going to find that there's a whole lot of value there. And everything that I just described to you, by the way, I deliver all the information, right? So it's coming from a real person that's actually doing this for a living, right? So that's all I got for you today. Thanks for joining me. Greatly appreciate it. I will see you next week. Take care.